Stavros Tousios for M4Markets, and in today's video we're going to have a quick look on Euro-Dollar and Nasdaq. Euro-Dollar has recaptured the 110 and Nasdaq is at 1250, if I'm not mistaken, heading for higher levels. What can we see going forward? I wanted to bring your attention back to the longer term price action, guys, and the patterns here that we see currently. This is an impulse to the downside, right? And we are currently seeing the recapturing not just of the 10 but also of the 50 Fibonacci retracement. This means that sentiment is going to change from January 21st to 2023. Now it's like 2 years, okay? Is going to change to bullish with the next target Fibonacci one at 112.77. But before that, we have a very important level to take out that lies around the 111.30 or so. Okay, that of course assumes that we remain above the 50 and the 110, because so far we've just tagged the level, and markets discount this RSI divergence that we see, which is a very important signal in my opinion. Now if we go lower down, pullbacks can be expected, especially now that we have done actually the 110 and we actually crossed above 110 with a retest now at 110, forming a potential support level. Now we have the ECB today, of course, and if the ECB, I would probably say the comments of Lagarde turn hawkish, then this is most likely to continue higher rather than not. Now, looking at this particular leg to the upside, I would probably use this Fibonacci extension to see where we could potentially find equality, and that's around the 111.53. Before that, that was the 110.60, which we already done. And let's also look at this. This is at 112.50, and the measured move, which is of course the last leg to the upside, would probably put that here as well. That brings us to 111.27. Now from a different perspective, let's not forget that as long as we are above the 50 here, we are also above the previous swing high, okay, and we remain biased to the upside. So the best thing to do is try Fibonacci here, since we have a peak in for the daily so far at least, and look at the 23 and the 38 for potential supports. Any pullback as are expected, technically speaking, to lead to further upside opportunities. However, let's not forget that we are expecting the ECB today, and in case we lose the 107.8 over here, and that could be possible if the ECB is very dovish, then things might change against that price action and the activity that we have been seeing lately. Now Nasdaq, on the other hand, guys, has broken outside this channel, and there is potential of it to enter an accelerated trend. It has entered it, but we do not know if it will keep it. We have a lot of big tech earnings coming out today, and if they reveal that prices, the companies are doing well, then we could be heading towards a 13K handle next, the 38, and then above that is the 50. And these two levels are actually very close to swing highs from previous price action, which suggests that they are going to be quite hard levels to go through, especially the 1283, which is the 38, which is the previous swing low over here from March. So with this break though, we cannot ignore the bridge of the channel, which then allows us to go and look at the 100 equality, and that is exactly where we came, guys, at 1248, 1250, let's say. So if we manage to remain above that level, or even above the 12K in general, then the next leg to the upside, which I see as a cluster at 1618, is at 1358, 1360. And if we do go there straight from here without seeing a significant pullback, that would also suggest further upside in the medium term, okay? But if for any reason we start dropping lower here and we lose the 1170, then this is going to add more bias to the downside. It's going to mean that probably this is a corrective structure. We have seen the equality extension up to the 1250, and probably or likely are going to see a potential reversal. For this, we have to pay attention to the 12K again, 1180 and 1158.